This is the FM Gold channel of All India Radio. In the program News Analysis, we now bring you a discussion on RBI's second quarter review of monetary policy. The participants are Paranjoy Guha Thakurta, economist, and Prakash Chawla, journalist.
Reserve Bank of India Governor Dr. Raghuram Rajan unveiled the second quarter review of the monetary policy, and expectedly he announced the repo rate, or the benchmark overnight short-term borrowing rate, in a way was increased by 25 basis points from 7.5% to 7.75%. At the same time, he also reduced, maybe in a balancing act, what is called marginal standing facility by an equal amount. So the message he was trying to send across was that inflation is his key priority. At this given point of time, it's a kind of a situation where you can't take chances with inflation, because at the consumer price level, we are almost near the double-digit level, and we have remained at this level for quite some time, to the so much of discomfort of the common man, because the famous and the humble onion story is all known by now, and even at the WBI level, the prices have really been going up. Pranjay, tell us as to how he reads the central theme of the policy by Dr. Raghuram Rajan.
Mr. Prakash Chawla, I think the biggest challenge before the Governor of the Reserve Bank of India is to control inflationary expectations. And I think that is really the difficult part of the whole exercise. As I quote from what he himself said, he said, inflation measured by the wholesale price index rose in September for the fourth month in succession. And the pass-through of rupee depreciation into the prices of manufactured products is acting, and there is elevated food and fuel inflation. Now, this is going to offset the possible disinflationary effects of low growth. This is the exact language that he has used. Even despite the favorable agricultural kharif harvest, and there is a usual seasonal moderation, the overall inflation as measured by the wholesale price index is expected to remain higher than current levels through most of the remaining part of the year. And the retail inflation as measured by the consumer price index has also risen sharply across food and non-food constituents, including services, and it's likely to remain around or even above 9%, and there are two charts which show exactly what is expected. Now, interestingly, soon after this policy was unveiled, we have the former Reserve Bank of India Governor, who happens to be the chairman of the Prime Minister's Economic Advisory Council, Dr. Chakrabarti Rangarajan. He himself said, I disagree. He says that he thinks that the inflation rate may not be as high as has been projected by the Reserve Bank of India, and he thinks the wholesale price index will hover between 5.5% and 6%, and he did not think it will exceed 6%.
If you see the policy, he has also indicated that the policy rate may even be further hiked.
That's right. You know, when Dr. Raghuram Rajan became the Governor of the Reserve Bank of India, the markets were, I should say, exuberant. If you read the financial newspapers, painted him out as to be a kind of a magician who's going to change the overall economic situation overnight. But Dr. Raghuram Rajan, it's clearly followed in the footsteps of his predecessor. Now, it's very well known that Dr. Subbarao, who used to be the Governor of the Reserve Bank of India, his perception of the role of the Reserve Bank in controlling inflation differed with that of the Ministry of Finance in North Block. Now, we see the same kind of difference in perception. Now, it has often been argued that if inflation in India is driven by food inflation, is driven by supply side factors, say the onion is a classic, or by other factors including speculation, then monetary policy or the Reserve Bank of India has only a limited role to play. And in turn, if by increasing the rate of interest, you are actually constraining the rate of growth of the economy and industrial production. I would here submit that this is not such a simple situation. That economists claim that it is growth versus inflation. No. It's a far, far more complex and a nuanced reality. The economy is driven by a variety of factors.
But Pranjay, at the end of the day, if the cost of borrowing is high, it adds to the overall cost of the economy. The demand depression is bound to be there.
Right.
In the process, in the trade-off between growth and inflation, do you think that too much emphasis on fighting inflation, we are sacrificing growth to a large extent, and to an extent which could also be called unnecessary?
This is where I disagree that it is simple one versus the other. I could argue that high inflation itself is constraining growth. Why? Because when people's purchasing power gets eroded, when you talk about inclusive growth, but if a large section of your population, their real incomes have been sharply eroded on account of inflation, especially food inflation, then you're not having inflation growth. You're actually widening inequalities, and that way you're creating social tensions. That way you're also constraining purchasing power, and that too will not help your industrial production. I think what is interesting, and this is what Dr. Raghuram Rajan also points out in his report, is the fact that, when you look at the expectations of inflation, and you also look at the fact that the rate of growth of the industrial production, capital goods, leaves a lot to be deserved, that we are today in a situation that the biggest concern and the biggest challenge is to control inflationary expectations. Now, we are importing 80% of our total requirements of crude oil. There's a huge pressure to increase diesel prices. If you increase diesel prices, this has an across-the-board impact on the prices of a wide range of articles of mass consumption. How then do you control
But
inflation?
as I asked you earlier, is monetary policy the only tool available to the system?
Answer no. But monetary policy is an important tool. It's not the only tool. Because, you see, why is Dr. Raghuram Rajan acting in a manner which is no different from his predecessor, Dr. Subbarao? Why did Dr. Subbarao act in a manner which is no different from his predecessor, Dr. Y.V. Reddy? Because as the head of the central bank and the apex monetary authority, the governor of the Reserve Bank has to look at a combination of factors. You are absolutely correct. Monetary policy is not the only way to control inflation. It's not as simple as only if too much money is chasing too few goods, that will, result in what economists say demand pull inflation. Inflation is on account of a number of factors. But looking at the economic situation and the likelihood of further inflation, that really is a problem. Like one of the problems that the governor of the Reserve Bank has alluded to, why is it that despite such a favorable monsoon and kharif crop, why is it that we are not seeing, the inflation rate of food products? Now that is a matter of concern. So what we are saying is we are dealing with a very complex kind of a situation. And here I must also say what the governor said about the international economic situation. When he came, I would say he's still going through a honeymoon period, but he came when the rupee was crashing vis-a-vis the dollar. But then we saw what happened. The US Federal Reserve has postponed the tapering program. We also see there was a belief that there could be an impending crisis in the United States because of the debt ceiling, and the government had stopped working for some time. There was fear that there could be a sort of armed intervention in Syria. Now, all these fears have today subsided. That means that there are good reasons why the rupee has strengthened vis-a-vis the dollar, that the international economic situation appears far more stable today.
This provides, Sanjay, a kind of a window of opportunity, if we may call it. And this window of opportunity may not be available forever, because the tapering, sooner or later, as they call it in the US, is bound to happen. They cannot continue $85 billion a month after month, year after year, because the US economy, the fiscal concerns there are also paramount, and that led to the shutdown of the government there. So this postponement of the tapering has provided some kind of window of, it's kind of a time that, okay, you guys, all emerging markets including India, you can get your act together in the meantime. Do you think that enough is being done to address those concerns?
All right. Now, this is a very, very good question you raised, Mr. Prakash Shawla. Let me again quote what Dr. Raghuram Rajan, the way he perceives it. He said, yes, the prospect of a delay in the taper of the Federal Reserve bond purchases has brought calm to financial markets and capital flows have resumed. But, then he says, nevertheless, headwinds to growth from domestic constraints continue to pose downside risks, and vulnerabilities to sudden shift in the external environment remain. This is what the governor is saying. He adds that in India, industrial activity has weakened. There's been a contraction in consumer durables. There's been a tepid growth of capital goods production, all of which reflects, as he says, there's a downturn not only in both consumption but also investment demand. Now, what he believes that yes, there'll be some revival of exports because of the weakening of the rupee. Agriculture is expected to pick up. There's large stalled projects in the pipeline have been cleared by the Cabinet Committee on Investment. But, and this is interesting that he puts them, juxtaposes them. In the meantime, with many large entities holding back on payments, liquidity pressures are building up on small and medium enterprises, and a number of are facing conditions of financial distress. These are exact words he used. And he said that one level the remedy lies in speeding up the government and public sector spending and inflation and also channelizing credit. But I think the big message that's coming through right through if you read this second quarter review of the monetary policy is that the central bank is really concerned about inflation. And even to that extent, Dr. Rangarajan, he has been quoted, I quote the Press Trust of India, where he says, I think the central bank of the country, for the central bank, price stability is the dominant objective.
Agreed. Ranjay, there's a lot of expectation around Dr. Rajan. And because of his background and because the way he conducts himself. And he has, besides in this inflation versus growth, he has also taken a number of initiatives, some of which could be controversial, have already become a matter of debate. For instance, foreign banks. The entire issue of his approach towards the foreign banks, how they should be allowed and how policy should be further liberalized to make easy access or easy entry for the further expansion of the foreign banks. How do you view these measures of these initiatives that he is trying to unveil? And some other issues, for instance, introduction of course it's a new issue, but he's trying to really push it through the retail inflation index securities.
That's right.
To protect the people from inflation. And then entire issue of new banking licenses.
You brought a number of issues. Let me comment on the 2 or 3 issues that you've raised. Let me comment on each one of them one at a time. The first thing I want to say is that, there are a number of issues, a number of initiatives that Dr. Raghuram Rajan has announced, and some of them are certainly quite contentious and controversial. At the same time, what has happened is he's appointed certain committees. For instance, on the whole issue of licensing of new banks in the private sector, there's a high-level advisory committee that's been headed by the former governor of the Reserve Bank of India. Now he's a member of parliament, this Dr. Bimal Jalan. And then we also have this whole issue of how they are, in a sense, making foreign banks the scheme of this is subsidiarization, to make the wholly owned subsidiaries to be given what they say near national treatment. Now, these are all issues that are going to be taken up. But what the Dr. Rajan has done in his he set deadlines, and he says that this committee's meeting, the first meeting will be held on so and so date. Say for instance, the high level advisory committee on the new banks, opening new banks will meet. The first meeting will be on the 1st of November. Then this whole scheme about this making this wholly owned subsidiaries, incentivization, that scheme will be announced by the middle of November. So what he's done, he's set certain deadlines. Then there is a Dr. Urjit Patel committee, otherwise Dr. Nachiket more on financial inclusion. So all of these, he's set these deadlines. That's the first point I want to make. Secondly, I think what was realized that one of the reasons why people were investing in gold, and that was one of the reasons why people were importing gold like crazy, and that was adding to the current account deficit, which was resulting in a weakening of the rupee vis-a-vis the dollar, that if you want to have a situation of inflation index financial instruments, then they can't be linked to the wholesale price index. They have to be linked to the consumer price index. I think that is an important new development. Like today, the wholesale price index is around 6%. So the consumer price index is closer to 10%. So that was one of the new points that has been made, and we'll see.
But the issue about this index bond is of the liquidity. Because if you give me index board, say 15 years tenure, and I want a liquidity also.
See, there are a number of issues that have to be done. Raising public awareness. What he's saying, these securities will be distributed through banks to reach out to the masses. So the banks will have to publicize it. What he's saying is that for retail investors, this launch will happen in November and December. But he says in consultation with the government of India. So time alone will tell. But I want to make one point, which is a general point. You see, often it is argued that, it's growth versus inflation. I think the economy is far more complex. But this other view is that, the Reserve Bank of India or the governor of the Reserve Bank of India has a certain view which should match that of the finance ministry or the minister of finance.
The central theme that emerges out of this policy is that inflation remains a key concern of the Reserve Bank of India. At the same time, there are the global concerns for now at least have abated, giving him some room of opportunity or window. On that note, we conclude this discussion. Thanks, Professor.
Thank you.
You were listening to a discussion on RBI's second quarter review of monetary policy. The participants were Paranjay Guha Thakurta, economist, and Prakash Chawla, journalist. It came to you in the program News Analysis, produced and presented by the News Services Division of All India Radio. This program is also available on our website, newsonAIR.nit.in. You may email your opinion about this program at airnsdtalks@gmail.com.